And what would you say then would be your prediction on some of the changes that might be coming in the mortgage market as a whole to help perhaps better facilitate opportunities for people to actually get back into the housing industry and the housing market?
Well, we're dealing with the greatest revolution of regulation in history in the housing finance system. I mean, as a former regulator with the administration, but a business practitioner and someone who's now running an institution that deals daily with the regulators to help them craft the best policy, we're seeing a whole variety of steps taking place. So right now we're dealing with 5 proposed rules that have come out of the Consumer Financial Protection Bureau in just a 6-week period related to housing finance to deal with the future. So national servicing standards, how will servicers treat you when you buy a home, and what will your Bill of Rights be, as it were, if you ever get in trouble? And will it be the same in every state in this country? Well, the National Servicing Standards proposed rule from the Consumer Financial Protection Bureau are going to lay those rules out, and they'll have to be complied with universally and equally across the country. So no longer will we hear, how stories of robo-signings in Florida or borrower mistreatment in New York or whatever happened in Kansas. It'll all be a uniform process. But everything from loan officer compensation to what's called RESPA and TILA. RESPA is the Real Estate Settlement Procedures Act, or the Truth in Lending Act, what information you get when you buy a home. All of this is going to be a lot more transparent. I will tell you that people should expect that the process will be more difficult. We're going from a period where there were no documentation mortgages, little or no down payment requirements, a wide variety of mortgage products. Whether they were sustainable or not is the question, from amortizing loans to loans that you make payments and the balance would actually go up. So all of those were in play, and what we're facing going forward, I believe, will be a much more thorough underwriting process to make sure borrowers can sustainably afford to buy a home. But look, here's the bottom line. If you've got a salary or a good steady income, you pay your bills on time, you got enough money for a down payment, you can verify all that, and you want to own a home, you're going to get a home. The people who won't get a home, for the most part, are probably families that we should have protected in the rental community longer and protected their wealth so that their credit wasn't destroyed and talked into housing when they otherwise weren't ready.